Hello, good morning everyone. This is my first streaming. It's an experiment. I don't know if it's going to work. So please bear with me while we polish some of the technical side of things. But yeah, it's an experiment. Thank you very much for being part of this experiment. This is going to be presented live today, and then it's going to be available in YouTube in case you want to catch up with it. And I'm going to talk about seven steps for crowdfunding success. So basically, I am a crowdfunding consultant, as you can probably see on the side panel. That's the hat I'm wearing today. I have other hats. I have been streaming as well with some friends in Spanish in another channel, No Tenemos Jefe. And today is my first solo stream, so bear with me with any issues that I might have. So I've been doing crowdfunding for a while. I did my own crowdfunding campaign twice. Once for the brand I was collaborating. I was one of the co-founders of Crumbs Brewing, and we did a rewards campaign with Crumbs Brewing. Basically, that rewards campaign, we were offering people to buy in advance the next batches of beer. We had done already. We had launched one variant, and then we decided to launch two more through crowdfunding. So that was very successful. We learned the hard way how to do crowdfunding, and I was hooked from there. So basically, since there, I did another crowdfunding campaign for a CIC, for a community cafe, and since then I've been helping other people with their crowdfunding campaigns. So that's one of my hats. I have several others, as I've said, but today we're going to talk specifically about equity crowdfunding. We will dip our toes on rewards crowdfunding because I think it's quite important, and it's one of the it's the older kind of the cousin of equity crowdfunding, and it precedes it, and equity crowdfunding was inspired by rewards crowdfunding, and I think it's a great way if you want to do an equity crowdfunding campaign at some point, if you have a product, to validate it through rewards campaign. So that's why we're going to talk a bit about that as well. So yeah, let's start. Let me put this in presentation mode, and let's start, because basically the main core of the stream today is going to be those 7 steps to success, but we will do a bit of an introduction about crowdfunding, what it is, and who is it for, etc. So what is crowdfunding? Crowdfunding is the funding of an idea or a company through small quantities of money, relatively small. They can be quite big, especially when we go to equity crowdfunding, but they're tiny compared to what a big VC would put in terms of money into a company. By a big number of people, that's the magic, right? You have a lot of people giving you relatively small quantities of money. And it's usually done via the internet, so usually through one of the platforms that exist already. So a crowdfunding platform would be a website. It's a two-sided market, basically. The entrepreneurs put their projects up there, and the platform facilitates that connection with the backers of that campaign, or the investors if it's equity crowdfunding. So that's the way I kind of distinguish the different types of crowdfunding. There's several types. What this big number of people expect for their small quantity of money, if you want, right? So the 4 types, the 4 flavors, the 4 main flavors of crowdfunding. There's a 5th that my friend Valentin mentioned as well, but I would focus on those 4, not to create any confusion. Donation crowdfunding. So what people expect for their money is just that warm feeling, right? There is perhaps somebody that needs an operation, for example, or it could be a charity asking for, support during COVID times. That would be the donation type of crowdfunding. They don't expect a reward; they just expect that warm feeling inside. Okay. Another type of crowdfunding is crowdfunding for lending. So people expect their money back, hopefully, and also with a bit of interest on top of that. So lending crowdfunding is another type of crowdfunding, quite popular. People are getting good returns with crowdfunding, lending crowdfunding. I'm not an expert on that side. I focus mainly on rewards and equity, with a bit of donation as well. But lending is a great way as well. If you have already a company that works quite well, a business model that's established, perhaps it's not so much for little startups that need to scale up because they probably don't have profits yet. But lending is good for small companies that are already operating and that are already generating good cash, and they can return it with a bit of interest. Another type is rewards. Obviously, that's the most popular kind of crowdfunding. So people expect you give money and you expect a board game or a video game or a product, a plant or whatever that is that they are. So basically, what the message usually on a rewards campaign is, okay, I have this idea, I've got this prototype of how it could look like. Please help me bring it to life. That's the kind of, and you will get in return in 3, 6, 12 months even, that first production batch of this reward that I'm giving you. Could be services as well. So for example, a concert, or it could be whatever that is. But yeah, you expect a reward. You expect something in exchange. It's a pre-sale in a way. Finally, you might not be able to see, so I'm gonna disappear for a second. The equity crowdfunding, it's the one that we will focus today. People give you money because they want to invest in your company. They are shareholders of your company now. And it's a great way, as we will see, to create a community around your company of investors that are really engaged, that really want your company to go really well, and they will help you in many other ways. So we'll see it in more detail. That's going to be the main play today, the main flavor of coffee, if you want, to continue with the theme of the slide. So let's dip our toes in the rewards-based crowdfunding, just very briefly, because I think it's important to understand the power of rewards crowdfunding. And a lot of companies that are doing equity crowdfunding right now started with rewards-based crowdfunding. Okay, they validated their product through rewards crowdfunding, and now they want to scale it up, and they go and look for investment. So what are the main benefits of it's a type of pre-sales, basically, right? Rewards-based crowdfunding, apologies. Pre-sales, you will have your product in 3-6 months, whenever that is, when I've been able to, with your money, being able to produce it for the first time. It's a great way to market your product, right? And to build a community around your product, because these people will feel part of your journey. They will feel part of your company almost, right? They were the first to believe in you. They were the first to believe in this new product. And it's a great way to give that product to bring it to the world in a way, right? It's also a way of validation. That's probably for me the crucial part of rewards crowdfunding. You are validating if there is a demand for that product before you invest too much money into producing it, okay? You want to know if that product will work, if that product will have, and it's the best way. When people put money behind it, that's the best way of validating it. Because if you do a market research, people might say, yes, I will buy it. But when people put money on it, that's the final proof that they are interested in your product. Okay, so for me, that's the main benefit of this great tool of rewards crowdfunding. Right, you're validating that there is demand for your product. Finally, one thing that not many people talk about, but it's a great way to understand how much demand there's going to be for your product, right? It helps you forecasting that first production run, especially if you have a product and there's obviously economies of scale. If you buy 10,000 or you produce 10,000 with your producer of that, it's going to be cheaper than producing 5,000. But it's risky to go for that 10,000 if it's going to sit in a warehouse somewhere gathering dust for months, right? So it's a great way to say, okay, I sold 300 of these. I expect to sell another 100 a month for the next few months. So that's my demand, okay? Rather than going with 10,000 and having them sit there for years in a warehouse. So it's a great tool for that as well. So the main platforms, you probably are familiar with them. Kickstarter and Indiegogo, those are the two main platforms. Indiegogo, funnily enough, was a bit ahead of Kickstarter, but Kickstarter is the most known platform. Kickstarter is the leader at the moment, the biggest community. And if you don't have a really, really good reason to go with Indiegogo, I would go with Kickstarter. They're more strict with their rules. They want you to have a working prototype before you are able to launch. So they have a strong filter there. Indiegogo is the follower. So they're naturally a bit more innovative, right? So they allow you to do things that Kickstarter will not allow you to do. So it's a good balance. Unless you have a very good reason, my choice would be Kickstarter. As well, in the UK, there are other rewards crowdfunding platforms. Crowdfunder.co.uk, for example, is one of them. It's great. They have a more slant of a kind of a social side of it, right? So, of course, they will take any commercial crowdfunding campaign, but they will go more. They will go more for those kind of social CICs. A bit blurred between donation and rewards. They do allow rewards, obviously, on their platform, and that's where we did Crumbs Brewing that I was alluding at the beginning. But you know, it's more about the donation and the social side of it. So here's an example of a campaign that I helped. Through email, basically, that one. Bottle Farm. It's a great kind of hydroponics. I'm still waiting for my reward, but it's a great hydroponics system that you can hang on your window. You put you just with any bottle you can put there the nutrients for the plants, and the plants grow there. So they did a great campaign. A lot of backers, 653. That's way above the average. The average is about 120 or so for successful campaigns. And they pledged 32,000. Again, well above the average. One thing I would like you to be aware of, you see those big headlines of campaigns that do millions, but that's absolutely the exception, okay? And that is usually because they have a big investment in advertising behind it. There's a few agencies that will help you on that. If you have the budget and if you have that ambition to go that big, by all means use them. But if your idea is to validate the demand of a product, etc., that is a more natural way to do it, right? In a more organic way. And that is a really good campaign in that sense because it's well above the average of both backers and money pledged. Let's go to the main plate of today, which is equity crowdfunding. And we'll do a deep dive. We have wet our toes with rewards. Let's do a deep dive on equity crowdfunding. And as we said, it's a way of funding your company by a lot of people through relatively small quantities of money. The average, for you to have an idea, is about £1,000 of investment via the internet, via one of the platforms, and we'll see which platforms you can use to do so. So the main benefit, the obvious benefit, is that you're raising funds, right? You need funds to scale up your company. You want to go to the next level, and you want to raise funds. So that's the main advantage, the main benefit that people, the outsiders, see, right? But I would say that if that's your only objective, beware, and then explore all of the other possibilities. You could go for grants, you could go straight into business angels, you can go to VCs. There's many other alternatives for funding, right? So if that's your only objective, be wary, because crowdfunding is, as we will see later, it is not easy. It takes a relatively long time as well. So you need to do it for the other reasons, which are by themselves enough, I would say, to launch that campaign. So one is marketing and communications. There's people that might not have heard you're a startup, you have a limited reach on your marketing communications. So that is a great way of being the radar of people, right? A lot of people that might come into contact with your campaign might become clients of you, might buy your product or your service, and they will be aware of what you're offering. And communications, a lot of PR opportunities. We will be launching an equity crowdfunding campaign. We're now live. We have exceeded our product. There's a lot of news-worthy elements on an equity crowdfunding campaign. I must say though that it's usually not enough, the fact that you're in crowdfunding, because there's hundreds of companies a year that do equity crowdfunding. You need to reach to get another angle, but it's a good excuse as well. So maybe you can talk about your mission as well, right? Or a good data point that your company has gathered with the first sales or whatever that is, and then bake in the fact that you're in crowdfunding. But it is a good excuse to get into the news. One that for me is really, really important is the community. You will have really engaged now, not only customers, but hopefully as well investors, right? They will be really engaged with you. And there's many in Crowdcube that they're quite proud of mentioning that. But fintech, for example, one of the categories that do a lot of equity crowdfunding, talk about the engagement of their users from being just another user of their bank, another user of their app, to being an investor, how all the metrics that matter really change a lot. How many people they're referring, how much time they're spending, how much money they're investing, whatever that is, through the app, right? So the app metrics just jump. These people feel involved. These people will try to help you. They will retweet your tweet. They will open you doors even sometimes. They will find you the next CTO that you need, whatever that is. That community of investors is just such an asset, so important. And finally, again, a bit of validation as well, right? You're probably validating through the sales already that you're having of your product or service. I would not recommend you to do it before having an MVP, by the way. But as well, the validation, what I mean here is more of the business plan that you have there, right? So you will put your business plan up in your pitch, in your website, and you will be validating it, because there will be people that will be asking about the market size. There will be people that will be asking about your forecast. There will be people that will be asking about the team, and in all that, it will be really good food for thought. You're a bit vulnerable up there when you up in the platform, but as well, you get feedback, a lot of feedback that's incredibly valuable. So that validation for me is another item, another benefit of going for this modality of funding over other modalities of funding. It needs to fit, and we'll see it later. So one question that I get, I'm from Barcelona originally. Some people struggle with English, and it's like, why should I do an international campaign? What's the benefit of doing an international campaign? I would, in most cases, recommend to do an international campaign, and we'll see why. But there are some disadvantages, obviously, as well. So what advantage do you have by doing it in specifically a UK-based equity crowdfunding platform? Mainly is the FCA, the Financial Conduct Authority, versus all other financial regulators. The two main platforms here, Seeders and Crowdcube, have done a great job of lobbying the FCA and making them aware of how can both investors and startups benefit a lot from a progressive regulation there around crowdfunding. And the FCA has by far in Europe the most progressive regulation for equity crowdfunding. So that allows these platforms to do a lot of things that in other countries cannot be done. For example, in Spain, if you say, okay, I'm going to raise €1 million, you can only raise maximum 1.25 million euros. There's a 25% cap of your overfunding, okay? And that's silly, because that's one of the most powerful things. When you reach 100%, people are really excited. It's the kind of empty bar versus a full bar effect, right? If you have queue outside your bar, people will want to come in and really they will queue outside. If your bar is completely empty, nobody will come in. So you're losing that power, right? if you limit it to 125%, you'll see in some of the examples I've prepared for you later that a lot of them have gone over 200, 250%, right? A lot of those campaigns, because that's the power of reaching 100%. Again, another advantage of doing an international campaign in Spain, for example, there's a lot of platforms that limit the minimum investment. In the UK, both Seedrs and Crowdcube have this figure of the nominee that syndicates all the smaller investments into one. So in your cap table, you will have only that nominee and the bigger investors, not just every people that put 10 quid. And that's why those platforms offer just 10 quid. And every single one of your customers can then become an investor, right? Everybody's got 10 quid. And if they believe in your brand, and they believe in what you're doing, then they hopefully invest as well. And then the potential. Those two platforms have the biggest community around, not matched by any other platform in Europe at least, and therefore the potential you have to reach big numbers is huge with those platforms. Okay, so again, be mindful. The community in the platform will never lead the round. It will need to be your community who leads the round. But then, once you have validated through your community and you have reached hopefully the 100%, then the community on the platform will jump in and invest as well. Investor diversification, right? That's important to have investors everywhere, and that community we were talking about, right? Those investors will become your community. So if you have a community across Europe or across the world, even there's a lot of investors from the Middle East in Seedrs and Crowdcube. There's a lot of investors from other countries investing through Crowdcube. You will have that diversification, right? And you will be able to reach all those countries as well. Finally, as well, the tools, quite important. Those both the tools for the investors and the tools for the entrepreneurs as well, right? They have built a suite of tools. Those two platforms that are amazing, in terms of managing your portfolio if you're an investor, but also of tracking your campaign if you are a startup, and how to do all those things. They've been investing money for years and years on developing their tools. So they're amazing, and I would recommend either Seedrs or Crowdcube in that sense over any other of the most known platforms. The language is something that you need to consider. Obviously, if you want to do an international campaign, the lingua franca is English, so you will need to learn to put some milk in your tea, maybe not that, but also to speak English as well, and you have to have somebody that can confidently reply in the forum. That's quite important. In those pitch pages, that there is a forum and people can ask you questions about the investment opportunity, and that needs to be answered confidently in English. One important point is about tax relief. Most countries have implemented some tax relief systems in which if you invest in a startup, they consider, okay, you're taking a risk. They want the company to, they want the country to do well and have a vibrant startup scene, right? So they offer those tax reliefs. Usually, if you're investing through that nominee that we mentioned, that tax relief is not available because you're investing effectively into the nominee, and the nominee then invests into the company. But then what I recommend my clients is, people that want to pay more than invest more than 5 or 10,000 can become direct investors into your company rather than going through the nominee, and they will be able to access that tax relief in your country. Okay. Again, if you're in the UK and you're a UK-based company, there's SCIS and EIS. That's a really, really interesting tax relief that you want to have is possible. It's proven that if you can offer those tax reliefs, those campaigns tend to do better. Okay. So which platforms do we have around? We have mentioned them already. They have been appearing. Crowdcube and Seedrs, the two biggest ones in the UK. About a month ago, they mentioned, they announced that they were merging. Effectively, Crowdcube and Seeders will be one company, 60% owned by Crowdcube, 40% owned by Seeders. My personal opinion is that limiting a bit the choice for, especially for startups, but also for investors on where to put their money, a bit of a shame. But the reality is that they were losing money both for those 10, 11 years that they have been around. And yes, that was probably in the long term unsustainable. So it had that feeling that, you know, the market was a winner take it all sort of market because of those network effects. But yeah, it has happened this way. For the moment, they're still operating as two separate entities, so it's worth, if you're planning your crowdfunding campaign in the next few months, to look at them as separate. But in the longer run, they're going to be one thing. There's other platforms, Companist in Germany and Seedmatch as well. In Spain, we have Fellow Funders, we have Socios Inversores, Bolsa Social. There's so many platforms out there. As I said, you know, as a consultant, you know, I would probably, if there's nothing that really points you towards one of those specific platforms, I will look at working with Seeders or Crowdcube, or even both. You know, what we have done often is present the project to both platforms, and then let them choose, let the startup choose according to what they're offering each one of those two platforms. So a bit of, you know, to look at the differences between Seeders and Crowdcube. They have slightly difference on their fees, but the fees is something that you can, until they're one thing, negotiate as well. So I wouldn't be too fixated on that. There's always space to negotiate, and they'll probably match each other at some point. What's more interesting to look at is those parameters here that I've listed here. So one is the secondary market. Crowdcube have announced now that in the future they will have some sort of secondary market. They will do projects like that. We'll see what happens with the fusion. Seeders has made it one of their USPs, one of their main points of selling, right? That it's available now, and the pricing is a variable. What I mean by that is that if you bought your shares by 10 quid, say, 10 pounds a share, perhaps the company has grown and has done another round, and then you can sell them for 15, right? And as well, there is a bit of margin there. You can buy them. I think it's a 30 plus 30 minus 30% from that. Okay, from the official price listed. So it's a bit of offer and demand there. The cost for the investor. Crowdcube charges the investors to invest through the platform 1.5% of the investment made. That is capped to £250, and below it's capped to 50p. So at least 50p, at maximum of 250, and then anything in between, it's at 1.5% of the investment made. It's a charge for the investor. Okay. Seeders also charges the investor, but it charges on the exit. So say there's an exit event and you can sell your shares. Then they will charge you 7.5% of the profits. Or even if you sell it on the secondary market, again, you know, if you made a profit, they will charge you 7.5% of that profit. Convertible rounds, Crowdcube have just started doing them, and Seeders has done it for years and years. Very briefly, a convertible round, it is a round that you do before a big round. So it's like, okay, I'm not sure about my company valuation right now, but in a year I'm going to do a big round. I need a kind of a bridge round, if you want, and you can have it with a discount against what's going to convert into that. The share's going to convert into that big round. Okay. Finally, quite important as well, paid marketing support. Crowdcube is a bit reluctant to offer it to smaller campaigns, big campaigns, to get a bit of marketing support. Seeders offers it as a standard. It's a great tool. I've used it with some of my customers, my clients, and it works quite well. So that might be, again, one of the tools that you want to use. If you have a big community already, you might not need this paid support, marketing support. But if you've got a rather smaller community, you can tap into that community by paying for this marketing support. So I'm going to show you some examples now on Cedars. These square mile farms, for example, you can see here the main elements of a campaign, but they were looking for 200,000 pounds of investment and offering 8.7, and they smashed that target at 218%, as you can see in the bar, raising 435 at the point I took that screenshot. And the pre-money valuation, that's another thing that you need to come in with if you're doing a straight round, a straight equity round. Another one, a German company, Highcube, that were doing renewable storage solutions. Again, they smashed it. They funded on the 12th of January 2020, 60% plus, right? Over funding, offering 5.27% equity. Another one quite interesting, and we'll talk a bit more about it, but it's a B Corp, a company that think that not profit is everything. They have a mission that goes beyond profits, and profits are a way of getting to that mission, of accomplishing that mission. Feminine products, Kalali, they did 1.7 million earlier this year. They had a target of 1 million. And offering an equity of 864. This is crowdcube. They raised on crowdcube. All Plans, a company that's quite dear for me. I'm an avid customer and now as well an investor. They make plant-based chef-made meals delivered to your door, they call it. Basically, they're frozen meals that you can just put in 15 minutes and you have a really tasty dinner, for example, for two. They completely smashed it. They were looking at 2 million and they raised 4.5 million. One thing I wanted to mention here, you can see here the co-investor Octopus Investments. So probably part of those 4.5 million comes from this big VC, well known in the UK, Octopus Investment. It's a convertible round, as you can see. So they were probably looking to do another round. They will do another round next year or in a year and a half. And we will get the investors 20% discount on that share value. Okay, so that's great. We will all be looking forward to that convertible round. But as you can see, they don't need to put a company valuation here. Okay, they do put in their terms a minimum valuation and a maximum valuation, but just to protect the investors and to protect themselves. But yes. At the moment, they don't need to settle with one number. Okay, there's a range there. We can talk about those things. If there's any more questions or if there's any topic that you want me to go more into depth, we can do it later. Okay. Another company that did very well, Cheeky Panda. They do low carbon bamboo tissue products, sustainable products, and again, they completely smashed it already. The value of the shares that I have on the Cheeky Panda have nearly doubled, and this was in April that I invested. So that's amazing, a great company. And as you can see, most of these companies have a sustainability angle, or they have a mission-led, mission-driven sort of companies that works really, really well on equity crowdfunding. That gets investors really excited, that their money is going to somewhere that's going to make good for the world rather than destroy it. Finally, I wanted to show you this other example, Kokoro, a company that I helped raise about a year ago now. They did really, really well. They make pants for menstruation and for vaginal fluids, sustainability, feminism, they have it all. So it was an easy message to come across, right? You have this big opportunity to be part of this company that's doing so much good for the world. So I think it's a good moment to make a break here and see if there's any questions in the chat. Okay, so there's Titia that's asking, what's the success rate of equity crowdfunding campaigns? There is a strong filter there. Okay, the platforms, both platforms don't want to have unsuccessful campaigns, right? So they have a very, very strong filter there. So they will not let you launch until you're really, really ready. Okay. So the success rate, they claim it's 80%. Debatable. They're not very transparent with the numbers, but it's because that really high success rate versus what Kickstarter, for example, has, which is short of 40%. So 80% would be more than double that. It's because that very, very strong filter. They will not let you launch otherwise. Okay. Also, Ticia is asking, how much of your objective do you need to have aligned before launching for your equity crowdfunding campaign? So again, the more the better, right? And if you could launch with publicly, and we'll see it later, the stages of the campaign, you could launch publicly with 100%, that would be ideal. That would be absolutely ideal, because then when people that don't know your campaign, then I'll, who are they? They already funded. What is this company about? That curiosity kicks in, and that herd effect, that 4-bar effect, if you want as well, kicks in. So as much as possible, I would say at least 66%, 2/3 of the way there when you launch publicly. We'll see in a minute or two those phases. Okay. Hola Alberto, thanks for joining us. Thanks for supporting me. And as well, Banaco, Valenti, hi Valenti, is asking, would you recommend to design a reward-based crowdfunding campaign in both Spanish and English to reach more audience? In my opinion, and for Spanish creators, it's a good strategy if you design to reach people speaking both languages. Absolutely yes, absolutely yes. That would be my approach if you can. And this platforms are still a bit behind. It's never easy to put it into languages and be clear with that, right? So for example, the video, which is an element we haven't talked about yet, but it's very important. You could do it with subtitles, for example. And as well, for example, you could do as well your campaign, your description of the campaign, your phase of description with both, sections in Spanish. You could do one section in English, one in Spanish. That works, and have a link on the top saying, okay, if you want to read it in English, go down. You could do it as well. Each element that you're talking about, the theme, presented in Spanish and then in English, Spanish, English, Spanish, English. That's a way of doing it. But absolutely yes, I do recommend it. It's not too easy to do it in most platforms, but it's it's doable and recommended as well. So Titsi again is asking, what's the most important bit of the pre-campaign? I would say, without any doubt, having a good starting point. What I mean is having a good community that will back you on the first day, that will show that you have momentum. And then, because as I said, the community on the platform will never lead the campaign. It will be your community that leads the campaign, and then others will follow, the community in the platform. So you need to validate it first with your community and then extend it and reach outside of your community. So that would be the most important element. Okay, so we'll go back to the presentation, and you came for the 7 steps for equity crowdfunding success, and that's what we're gonna deliver now. I think that's the best way you're gonna see it, with me on the top. So what are the 7 steps for equity crowdfunding success? First of all, most important, check it is for you, okay? Because if it's not for you, you probably shouldn't be even thinking about it. There's other ways of funding a company, there's other ways of funding, and we're talking, by the way, here specifically on equity crowdfunding, right? If you want, one day we can talk more about rewards-based crowdfunding, and we can talk about what's the 7 steps for them if you want, okay? But specifically for equity crowdfunding, I would say you have at least an MVP, and you are in the market, you have some metrics to show, okay? It's very difficult without metrics to go out and convince investors to invest in you, okay? So if you're pre-revenue, if you're pre-launch, perhaps other routes, especially grants, probably is the best way if you need a big amount of money to go for. Another thing as well that's quite important that you need to check if it's for you is the amount of time it will take, right? You need to prepare a video, you need to prepare your pitch deck, you need to prepare your page and be presentable on all the networks. And you need to work a lot on the pre-campaign, okay? Having that initial momentum, that community that will back you initially. So check that you can do it, really, okay? And again, if not, look for other alternatives. And as I said, the many other benefits that you have, if it's for you, it's so powerful. So if it's for you, I would recommend it 100%. The reality is that of 10 leads I have to work with them on the campaign, I end up working with one or maybe two, right? So it's not for everyone. And then I am very open and honest and very straightforward when I don't think equity crowdfunding is for my clients. And it's very important not to go down the route without checking that it will be a good investment of your time, if you want. One way of doing it, typically there's this myth that B2C companies are more suitable for equity crowdfunding rather than B2B, right? But the reality is that if you have a strong mission-led message, you can do it also being a B2B company, right? And things that kind of seal the deal are being a B Corp, for example, or linking your mission to the Sustainable Development Goals. We see more and more of those equity crowdfunding companies that go out there asking for money, talking about SDGs, talking about how they're a B corporation, talking about they're doing good in the world. So don't be put off by the fact that you're a B2B company, that you've got a small community there. Can still work. It's a bit more challenging, I'm not going to lie, if you're B2B, but it can still work if you link it to those things that I'm talking about here. So again, another super important point, and we have alluded to it already, is building your community. Building your community is super, super important. The worst thing is that you launch your campaign, both rewards and equity, and crickets, nothing happens. There is the rule that Valenti calls the 390-100 for rewards-based campaigns. That is that if you have the 30% on the first week of your objective, if you collected 30% of your objective on the first week, you have 90% chances of getting to the 100% of your objective, okay? In equity crowdfunding, it's even more exaggerated, and the platforms are not going to let you launch if you don't have at least 50% pre-aligned, okay? So building that community is super important. There's many ways of doing it. If you have a base of clients already, a product-based company, it can be your customers or an app, for example. It can be your users. If you don't have any of that as well, think about reaching out to business angels, for example, reaching out to public funding corporates and work your community like that. And we all have friends, families, people that we studied with, people that we worked with, and all that can be part of that big community that will help you on the first day. Take it easy. It's a long journey, okay? And don't rush it. Very important. And we can see now, perhaps the typical timeline. I'm going to disappear for a second. But the typical timeline of an equity crowdfunding campaign. And that's, the pre-campaign will be 2 to 4 months. And that's assuming that you already have a bit of a community going on. I've seen campaigns, pre-campaigns lasting for up to 12 months. That's not surprising. And it's just because you want to be really sure that when you launch, you have that momentum, okay? And what are the main tasks on that pre-campaign? You have to prepare and refine your business plan and your business pitch. People will ask you for the business plan and people will want to see your business pitch. So prepare that and refine it, iteration. We'll talk about iteration a bit later. If you're UK based, that's a good time to apply for SEIS and EAS. And as I said before, it's a great incentive for investors UK based as well. And the campaigns that have that tax relief tend to be more successful than those that don't. Engage with investors, as we were saying, as part of that, building that community, quite important. If you can have a cornerstone investment, say you need 200,000 and somebody that puts 50, 75, that would be really helpful getting to that number, okay? Prepare your video and prepare your page. Super important, the video. We can have a specific session on the video if you want one day. And then, more important, get the project approved by the platform. And getting the project approved by the platform, there's a pre kind of due diligence, if you want, making sure that all the claims that you make are fair, and not misleading, right? That's the way that the FCA put it. So you will need to get that project approved by the platform. They will ask you about your percentage, how much you have raised already, etc., etc. So talk with the platform quite early during that pre-campaign to make sure that everything is lined up. The campaign life itself can last 2 to 3 months, and it has in equity crowdfunding typically two phases. One that's private, and only the people that have your link will be able to access it. So that's the time for you to tell your network, look, invest please, here's the link, put the money quick, and have a good percentage before going public, okay? You have to raise at least 20%, but as we said, 20% will be probably not enough this day and age. Much better if you can get over 50%, much better if you can get to 80, 100% even of your objective at that phase. And then there's a stage which the campaign is public, which lasts 4 to 9 weeks, and the pitch will be available to all investors, okay? They will be able to invest. And one thing I haven't mentioned yet, but I think it's important to say, those campaigns are all or nothing, right? Either you reach 100% of your objective and you will get all the money that has been pledged or invested, but not yet in your account, basically. If you don't get 100%, then you will not get anything, okay? It's quite important. I've known of campaigns that with 90% they have released the funds anyway because they consider it's close enough, but the FCA is quite clear that if you say that you need this amount of money, you need to reach it. And if you think about it, it's quite honest, right? Your pitch is saying, okay, I want to grow, I want to scale up my company, and I need £300,000 to deliver this business plan. If you don't get to £3,000, you will not be able to deliver that business plan, right? So it would be very dishonest, I think, if the platforms allowed you to get the money even if you don't get 100%, because you wouldn't be complying with your promise, right? That's what you put in the business plan: a promise to execute certain actions, for example, marketing campaigns, or certain staff increase or whatever that is. So if you don't have that money, you wouldn't be able to do it. So I think it's a good thing that it's an all or nothing campaign. The post campaign, 1 to 2 months, you will not receive the money on the day you close the campaign, right? There's going to be still some tasks to be done, and that's the final due diligence. So the company will, the platform will check that they're giving the money to the right people and to the right company. Crowdcube has a cooling period, so they're telling the investors, okay, you said that you wanted to invest in this company. Are you sure? They let you do your own due diligence if you want, right? And you can pull off if you want. So you need to factor that in, because that's going to be time that the money will not be in your bank. Then there's time to collect the money. Again, Crowdcube doesn't. The money is pledged, is not in any account. Seeders do it a bit differently. Seeders put it into an escrow account holding that money, and then they release it, so it can be a bit quicker with Seeders. Crowdcube will need to collect that money, make sure there will be declined cars, there will be all sorts of problems there, so be patient there. And then you will need to go and issue the shares, right? And make sure that you're complying with your local regulations, in your country. So that's why the post-campaign lasts 1 to 2 months. I always make sure that my clients understand that, they will not have the money in the bank the day that they close, which is usually what happens with rewards campaigns, but they will have to wait 1 to 2 months if they are really speedy and they're doing their bids as well when they need to. So another thing that I tell my clients, you need to learn to speak the investor's language, right? You might have your own agenda, you might have your own way of seeing the world. The investors have a slightly different way of seeing the world. And let's see why I say that. So an investor, what they're looking is high returns to justify the risk, right? They need big exits on their portfolio to compensate for the failures. They know that probably of every 10 startups they invest, 6, 7 will fail and they will not return anything. 2 or 3 might give them back the money, just about, and 1, maximum 2 of 10, they will give you big returns, right? So all the bets that they place in the market need to be at least with the potential of giving a return on investment of 3x to 10x, right? To justify that risk. And that return on investment for them is key to the company valuation, right? If you're saying, no, I think I can multiply your money by 20, it's one thing. But if you say, okay, I think I will be able to multiply your money by 3, it's another thing. Okay, so that's how they think in a nutshell, very short, right? We can again do a full session just on investors' mentality, right? The entrepreneurs, have this sentimental attachment, this really heartfelt, they don't want to give too much of the company away, so many emotional implications there. And they need to ensure, again, because raising money is an exhausting process, they need to ensure that they don't need to raise, again, in 12 to 18 months at least, because it's exhausting, basically. And they might look for smart money as well. What I mean by smart money, what the market means by smart money, is people that can not only put money, but they understand the market, they have connections in the market, they can open doors, basically, right? So that's quite important for a lot of entrepreneurs at this stage, at the early stages of their company. One other thing that I always tell my clients is that they need to iterate, okay? It's not a process that will be done and dusted the first time you'll get it right? So, for example, when you're preparing your business speech, go quick with your first attempt at the very beginning, but don't take too much time. Get it to some friends, get it to some potential investors that are close to you and say, what do you think about this? How would you improve? And maybe they'll say, okay, it's not clear for me who your market audience is, who your target audience is. I'm not clear about your market size, for example. Can you come back to me with another iteration with those 2 points refined? And then you refine, and then you send it to a few more investors and ask for their feedback. You need to think that investors really like to feel useful, okay? So they're probably experts on the market, and they want to give you their advice. So if you give them the chance, and there's this old saying in investment: if you ask for money, you will get advice, and if you ask for advice, you will get money. It's not always true. It's quite simplistic, that expression, but there is a nugget of truth there. Is that if you take your investors in a journey, help me out. I'm starting up. I need your feedback, I need your opinion, and they will be more emotionally engaged with you. Then you can start that conversation, and they're more likely to invest later on when you go with your equity crowdfunding campaign. Okay? Do not despair. Very important, because it's kind of a long race. It's a marathon. It's not a sprint, really. It's such a topic, but it's so true. And I'll show you, for example, this graph here. It's from a rewards-based campaign, from the Crumbs Brewing campaign, right? But I just wanted to show you how typically those campaigns look like, okay? So you have a big peak at the beginning. Your community, if you're done your homework, right? Your community will jump at it, and they will invest, or they will give you the rewards. But then you will have a lull there in the middle of the campaign, right? You will lose momentum. It feels like you're losing momentum. It's not the case, because if you keep doing your communications, keeping updating your page, sending emails to your community, etc., you will see this other peak here at the end, right? When there's that fear of missing out, right? If you don't invest now, that's your last chance to invest at this price, right? And you have a peak at the end. So it's a very U-shaped sort of campaign. So don't despair, right? If in the middle you think, oh, I might not get there, if you continue doing your job, you will get there, okay? And then last but not least, surround yourself from the best team that you can afford, really. And you need to think about what's the business model about the platforms, right? They're not going to help you as much as you would like them to help you. So you want to have a good video, and then if that's not in your skill set, doing a good video, go and look for a good videographer. You need to have a good copy. You need to have good photography, and as well, you need to have, most importantly, a really good strategy, right? And that's my call to action, if you want, right? If you think that you need some help here with your equity crowdfunding campaigns, do give me a bell. I'm gonna put my ways of contacting me later on. But it's really important to have a good strategy. Otherwise, it's very difficult to get to your objective. It's very difficult to get accepted even by the platforms, if you don't have a good, credible strategy. So do give me a bell. We can talk about how I can help you. And if I cannot help you, I will direct you to the people that can help you as well. That's pretty much it. If there are any other questions on the chat, I'm going to go back to the chat now. If there are any other questions there, there's no more questions for the moment. We did quite well. We were on the hour as predicted. So again, if you've missed part of this presentation, I'm gonna put it on LinkedIn. On YouTube. And in all of the channels there. Reach me on email. Reach me on my website. My website, I have hundreds of articles, maybe not hundreds, but quite a few dozens of articles about crowdfunding. So feel free to read those articles for more information. And yeah, thank you very much. And I'll see you. I'm thinking of doing this every Friday. So definitely next Friday I'll be here talking about another topic. I'm not quite sure yet what it's going to be, but yeah, come round and see how it is. Thank you very much, and yeah, see you next time.